Capital's exclusive analysis. In today's video, we're looking at the S&P 500 ahead of the NVIDIA earnings. After the bell, we have two semiconductor companies that are going to be epically important for whether this market trends higher in the near term or decides to fall lower and see some profit taking. So the S&P 500 intraday 15-minute chart here, you can clearly see the S&P 500 back tested that 5,900 level and has held it to a T. This is potentially setting up a very, very large bullish pattern, an inverse head and shoulders, as you can see from this left shoulder, this head, this right shoulder. So this intraday pattern is setting up something that we could see a very, very large move ahead. Simply put, if this inverse head and shoulders triggers, which I think we're actually going to be rallying to the neckline today, and that neckline rally would roughly put us around, call it 59.40, so another 30-point move on the SPX. On SPY, that would roughly put us near the 592.50 mark. If this were to trigger and break out, and a breakout occurs when you get above this neckline zone, this dotted green line, to extrapolate the move forward, if we were to break out, you're looking at an S&P 500 of around 6616. So that would be a substantial move higher in the near term. And I do think that it's very, very likely. Now, this is the 15-minute chart. So let's remove this 15-minute inverse head and shoulders. It hasn't triggered yet, but it's in the formation of potentially doing so. Let's look at the daily chart of the S&P 500 because that is pretty fascinating in my opinion. First things first, we have to really recognize that we're developing a much larger inverse head and shoulders on the daily. This is your left shoulder, this is your head, and this is your right shoulder in the formation process. Now, although we're developing and haven't triggered this major inverse head and shoulders, there is a smaller inverse head and shoulders that we have triggered. If you were to simply move these left shoulders a little bit tighter in and the right shoulder, you can clearly see we've broken out of this neckline. This intermediate inverse head and shoulders gives us an upside target of around 60, just below 6,700. So you can imagine if NVIDIA earnings come out well and the stock presses higher, it's actually going to support the S&P 500 pushing to new all-time highs. So again, NVIDIA right now is forming this tight bull flag. It also has some major inverse head and shoulders patterns developing, and if these earnings come out very, very well, we're looking at a 190 target probably pushing into the end of the year and come 2026. So all eyes are on NVIDIA. All eyes will also be on SPX. This is a much higher priced semiconductor name that is also set to report. You can see the last earnings was really a treacherous sell-off. This has had a strong momentum rally into the actual earnings report, which is showing that there are strong expectations, which is why I do think that these markets are probably going to be pressing higher in the near term. So again, NVIDIA looking like it's going to probably break out on its earnings reports, which supports the thesis of these bullish patterns that are developing on the S&P 500. What's very, very interesting about the S&P 500, this SPX chart, is this was a clinical backtest zone to buy. We actually issued alerts to our members to buy calls, entered a few long positions off of this level. This was a major pivot level as seen over here, and it was a major upsloping pivot level as well, and it was the daily 200 moving average that you were back testing. We've seen a very, very nice sell-off today, but I do think that the markets are looking to make new all-time highs in 2025 because that was not on anyone's radar after this tariff sell-off. This sheer trajectory of this V-shaped bounce is something that we haven't seen for really a long time. The last time we saw this terrific V-shaped bounce was kind of at these COVID lows. So whenever these markets see these sheer epic rallies and bounces, we just have to be mindful that there's some massive amount of buying pressure and liquidity entering the market. Whether it's a bear market bounce, one can say it is, but at this point, I don't think it is a bear market bounce until we break some pretty key pivotal lows. If for some reason we were to lose that daily 200 moving average again and start closing below this inverse head and shoulders neckline over in this vicinity, then maybe one could start looking for a bear market bounce. But as far as I'm concerned, from your high to your low to your lower high to another low. We've actually taken out this high. So markets are looking to press and make a higher high here because we've already taken out this high. So I'm respecting the bullish trend. I'm still leaning more bullish. There's some key observations that I'm watching in the bond market that are telling me that we can still trend higher in the near term. But as for the semiconductors and the second largest company in the market, NVIDIA is going to be a surefire market moving event that is going to dictate the necessary trend for the next, say, couple months in this market. On that note, please give this video a like down below. Comment whether you think NVIDIA is going up or down, because we are set for a wild market earnings report after the bell today.